For this week's View from the Top, I spoke to Richard Ward, Chief Executive of Lloyd's of London, the historic insurance market that's been at the heart of the City of London for more than 300 years. Mr. Ward expressed some concern at British Prime Minister David Cameron's split with the rest of Europe at the recent summit to save the euro.
I think it's too early to say. Clearly he hasn't solved the Eurozone crisis with the veto, and that is our concern. What is happening to the euro and what is the likelihood of a sovereign debt default and a collapse of the Eurozone? So that's something we worry about. And of course here in insurance we also worry about regulation, and the regulation is coming out of Brussels, and so we've got to work very closely to ensure we have good links with Brussels. And so irrespective of what the politicians do, we as a business need to make sure we're very closely aligned with what's happening in Brussels and happening in Europe to make sure that the regulations that we need to implement here are right for our market.
And to what extent do you think the industry is in danger of losing its place at the table?
I think there's always a danger when you have these political situations that the voice of the UK and therefore the voice of the industry is not heard so loudly in Brussels. And so I do worry about that, which is why I said to my team, right, we need to spend more time now going out to Brussels to make sure our voice is heard.
And then, of course, according to the headlines, the veto was exercised in the name of the city and the UK financial services industry's interests. Do you think that the financial services protocol that they took there, the kind of the things that they were supposedly looking for, are things that the city would support and were worth fighting for?
It's good to hear the Prime Minister talking about supporting the city, and that's a very important element to it, and so we're grateful for that support. Whether he actually has supported the city through this action, again, it's a little bit too early to say. We're seeing quite a few negative reports in the FT itself as well as on the television, and so I think there's mixed views at the moment as to how effective this will be in terms of supporting the city. But I come back to our focus, and our focus is working with Brussels and the Commission, because those are the people who are driving the regulation, Solvency II in the insurance industry, and we need to work with them irrespective of what the politicians are doing.
Obviously it's been a big year for natural catastrophes this year in not the normal part of the world, and a big decade in lots of ways. Why is it, do you think, that we're apparently seeing so many more catastrophes, and what does it mean for the insurance market?
It's difficult to say why we're seeing more catastrophes. Some people try and link it to climate change and other such things that are happening in our environment, but if I think of it from an insurance perspective, what does it actually mean for us in insurance? What we've seen in 2011 is potentially one of the costliest years on record. The first half of 2011, the claims that we saw out of Christchurch, the tsunami in Japan and the Australian floods actually made 2011 as a year the second costliest on record. Since then, we've had the Thai floods, we've had Hurricane Irene and other such natural disasters. So 2011 is shaping up to be a very costly year in the terms of claims. Now, from our perspective, of course, that's our business. So we're here to pay those claims, to meet those claims, but it is quite interesting to see the impact of that claims activity on the insurance rates. And what we're not seeing at the moment is the international insurance markets responding in a way in which you would expect them to respond in the event of so many claims.
And talking about climate change for a moment, how much of the impact do you think is due to climate change, and related to that, were you disappointed? Do you think we could have got a better deal in Durban? Does that make a huge difference from your perspective?
Long term it would make a difference, but what we are seeing a short-term phenomena at the moment, and it is difficult to directly attribute them to climate change, but I think people would suggest, and we are seeing it ourselves, that the frequency of these major catastrophes are increasing, the severity of them are increasing as well, and so yes, there probably is some link there with climatic activity and CO2 emissions.
Obviously a lot of the increase in claim, the money amount of claims that we're seeing is to do with the amount of stuff that we have insured and how much that stuff is worth, as much as anything else. The insurance industry obviously has an interest in seeing governments spending money to protect assets. Do you think that gives the insurance industry an interest in perhaps being more alarmist about climate change than some other sectors?
I think the key for us is to encourage governments to take appropriate action to sort of mitigate the risk of climate change, or frankly adapt to it. But ultimately, when these disasters happen, we're there to help businesses rebuild.
And so moving on, you've got a new chairman now in Lloyd's in the shape of John Nelson. How is he bedding in, and what has it meant for your role and how your own role has changed?
Well, he's doing a very good job indeed. You of course expect me to say that, but the reality is he is doing a great job. He's absolutely immersing himself in the insurance business. He's actually out in China at the moment, understanding our operation in China. And I think for me, it gives me someone I can work with and discuss the issues and take this business forward.
And we recently saw an interesting little deal with China Re doing a syndicate alongside Catlin. Do you expect to see more of that sort of thing, and do you expect to see much more Asian money, for instance, coming in?
Yeah, I mean, that's a small step, but I would hope we were able to build on that small step. It is very interesting that China Re have taken the decision to invest directly in Catlin and bring people over here to help their staff understand how we underwrite business here. And as I said, hopefully those people will then return to China and share those experiences.
And in terms of your own role, has it become more outward facing now? Are you more are you becoming more of an ambassador yourself for the market now that Lord Levine has gone? And do you grasp that opportunity with relish? Or?
That's the chairman's job. I mean, the chairman is there to be the ambassador for Lloyd's and promote Lloyd's. You know, I have a very active job to do here in London, working with the market here in London, of course, as well as looking after our overseas operations. And we have something like 24 offices overseas. So I will spend a lot of time travelling overseas to meet with my staff and meet with the syndicates that are operating in those overseas territories to just help me understand what the issues are and what we need to address them.
Okay, so now we're going to play our game long short.
Yeah.
So I'll ask you a series of questions and you answer long or short. So first of all, the survival of the euro.
Short.
The UK in Europe.
Long.
And the city as the leading financial centre of Europe.
Long.
How about a new Kyoto Agreement?
Short.
And how about China as a world leader?
Long.
How about more Chinese money in Lloyd's?
Long.
New retail banks in the UK?
Short. Apologies to Lord Levine.
New insurers entering Lloyd's?
Long.
And Lloyd's as a subscription mutual market?
Long.
Very good. Richard Ward, thank you very much.
Thank you, Paul.